Now, even as growth in Asian economies is slowing, the head of the International Monetary Fund says the region as a whole is doing better than most of the world. Now, turning to China, the IMF's managing director, Kristalina Georgieva, told CNA's Elizabeth Niu that Beijing needs to create conditions that favor consumer-led growth.
Most economies, they are, of course, battling stubborn inflation, but one country is facing quite the opposite, China, deflation.
Yep.
IMF has, in fact, raised China's growth forecast to 5.4% for this year, but it's warned that, troubles in the real estate sector, subdued external demand that is likely to weigh and slow down the economy. How else do you think China can secure a quicker and sustainable recovery? We see, measures from the government, these piecemeal measures. Many people say that's not enough.
Well, for a while, we actually were saying that the government had more space for policy action. And I'm very pleased to see that China is now using more of this space, both in terms of expanding the budget deficit space and in terms of providing more support to the real estate sector. What China is bound to do if the country wants to sustain higher growth rates is to pursue structural reforms. What does it mean? State-owned enterprises reform, make sure that there is more tightness on the fiscal side for local governments, and create better conditions for consumer-led growth by just improving the pension system in China, so people are not worried about their old age and they don't save so much that they spend less. China can support faster growth.
I'd like to zoom in a little bit on Asia as well. It continues to fuel global growth, but momentum is slowing and prospects for growth in the coming years are dimming. What do policymakers need to do? How can they step up?
Well, Asia is performing on the whole better than most of the world. We look at this year, Asia Pacific is going to deliver 3/4 of global growth. But yes, it is slowing down, understandably, with high interest rates. This is throwing cold water on growth everywhere. What Asia needs to do is to continue on the path that it has chosen, which is invest in education, make sure that people can adjust to a world of rapid change of technology. We started with artificial intelligence. That can be a big boost of productivity, but only if there is attention to how the labor market adjusts to this new world. By continuing to pursue a strong attention to the financial sector, that has been a good practice in Asia, and by embracing the drivers of new growth, green growth, addressing climate change, as well as technology-driven digital enhanced growth. And Asia has the ingredients to achieve it.